Happy Wednesday, everybody. Welcome back to another episode of Benzinga Live. Good little rally we're having here in the SPY and the Qs right now over the last few minutes from what I've been watching. We'll go ahead and check that out. Some other top headlines of the day, of course. Yeah, Jay, well, maybe we'll have to call Raz and get a nice update on that Crocs play. We talked about that yesterday. I've got a new stock that I went long today. It's been in the news over the last 6 months. Not really. I wouldn't consider it like a big sleeper pick or anything. It's been kind of out there, but I was doing some more research on it this morning. And really, I fell in love with the thesis on this. So I'm going to go ahead and pitch that stock later this episode. Let's see. Catching up on the chat. All right, guys. And then, of course, our newest Benzinga intern, Nick Brown, will be joining us today, co-hosting with me for the full episode of today's Benzinga Live. Today, unfortunately, is Nick's potentially, last day being able, at least in the next few months or so, to fully co-host an episode with me as he starts school tomorrow. So if there are any stocks, any trades, any news stories that you guys are watching, as always, drop them in the chat and we can go ahead and talk about them today. But let me go ahead and get my Benzinga Pro pulled up. We'll run through the indices real quick before we play that intro and get going. I don't really know. I mean, it seems like as far on the news front, Wall Street is still very much kind of just hanging out waiting for this Friday event. I don't know what you want to call it, a symposium. What's a symposium? Does anyone actually know? It's one of those words that, you could throw that around and I'd believe you, depending on what you're saying. Yeah, Dylan Carlson, center fielder for the St. Louis Cardinals. Let's get those laughs rolling. Take over the stream and kick out if he goes on his phone too much. I'm not even on my phone. My phone's in my pocket. I don't have my phone. Look, I'll do the whole show with my hands up here if you want. No, then I won't be able to control my Benzinga Pro. I don't know. Okay, so Bank of America, S&P 500. Let's go to a 5-minute chart here because I'm more concerned about the intraday movement here. Like I said, we've got this little rally here. Really at 11:10 in this 5 minutes, you can see we went up about 0.2% on the SPY. So good pump there. Looks like we're giving up some of those gains here, but we'll see if we give up all of them or if we kind of reverse and continue moving higher. I know Nick is coming prepared with some different headlines for the day. No, Shelly, I have my phone. Event where the bigwigs attend. A symposium. A simp that poses and talks about isms. I like that. Is that me? I don't really talk about isms that much, I don't think. But yeah, so guys, I know when Nick joins us back, we'll be talking about some Bed Bath & Beyond. Of course, Twitter, that whistleblower news, checking out all of the biggest headlines, Toll Brothers as well. I believe we're getting that news about the student debt relief at some point today. I believe it's $10,000 if you make less than $125,000 a year. So a lot of people will be eligible for that debt relief. Celsius all-time high. Luke should not have sold. Wait, is Celsius really at all-time highs? That's interesting. So I wonder, so Luke's thesis on this was crunching the numbers. Celsius would have to grow its business by about 3 times for its current valuation to essentially make sense. And I'm not very bullish on that either. I think there are a lot of the good things that were happening with Celsius last year, i.e. becoming essentially viral on TikTok, getting all this free marketing. It's kind of gone the other way, where now people on TikTok and people on social media are talking about, these liver problems or kidney problems, and if you drink too many Celsius, it causes, which is kind of and that's not really unique to Celsius, right? There's a lot of different brands, a lot of different products out there that might get big, get really popular, and then come out of fashion, right? Whether it's a fad or what it is. So what you want to do is you want to find those companies, and it sounds a lot easier, it is, to figure out, okay, this popularity is here to stay, right? I'm sure there were people that called Apple products, iPods or whatever, fads back in, 2003, right? When they first saw Apple's stock skyrocketing up, saying, okay, yeah, everyone's buying these iPods, but, in 5 years, they're not going to be around, so I'd rather buy, Enron right now, right? That was happening. I'm sure that's what people were saying. So it's easier said than done, but you need to find these products, these businesses that have such a footing that essentially it's not going to be like Celsius. Well, actually, Celsius, it's too early. It's too early to say whether it was a fad or not. I think the product is more than likely to not here to stay, right? Like I think Celsius will be around for a few years, but my other biggest kind of bear thesis on Celsius has always been like their whole thing has been carving out this market as a healthier energy drink. I mean, it seems obvious, like Red Bull, Monster, whatever, like they'll put out some healthier energy drinks to compete with Tesla or to compete with Celsius as well. I see some other names in the chat. Shelly's saying bring Nick out. He's fun. We will bring Nick in a second. We got to play the intro. And then we'll get him on. A symposium, a conference, or meeting to discuss a particular subject. Symposium. I feel like I'm on a spelling bee. The other, kind of similar to Celsius and like, potential fad type things. Jay Rice mentioned this stock in the chat today. We talked about this yesterday with Raz. Crocs. This is another one that probably a lot of people back here, right? If we look at the weekly chart of Crocs back here in 07, 08, when this stock went up to $75, they were like, oh, this rubber shit. And this actually was when, I mean, to be fair, there probably was a Crocs fad in terms of, the extent of like everywhere you walk down the mall, like every kiosk was selling Crocs. Everyone had Crocs, and then that kind of fell off. But the business and the product was strong enough that it held on. It's made its cultural impact. So even if Celsius, right when if we look back to last year when the product was going viral on TikTok and everyone was talking about Celsius, if we look at it, even if that falls off, right, you're not getting that same viral marketing for free on TikTok, but Celsius still remains a product that people buy and use. It's not really going to matter for the stock price as much because like we did when we crunched numbers with Luke, essentially a stock will have to grow by 3. This company will have to grow its revenue by 3 times, which it's not, in my opinion, primed to do. So I'm staying away from it. I'm not short it right now. I wouldn't go short it right now because stocks that are making new all-time highs tend to make new all-time highs. And another teaser for the stock that I will pitch on this episode, that stock that I'm talking about that I'm going to pitch is also making new all-time highs. So maybe that'll give someone, anyone who's paying attention out there a hint. Friendly reminder to punch that like button. Smack it in the face. Play a little game, right? With the like button. Pretend you're Will Smith. The like button's Chris Rock. Are we still making those jokes? Is that playing? How quickly? I mean, that our attention span as news consumers is so small. Biggest story in the world for about a day, and no one talks about it. All right, guys, it's about time. Let's play the intro. Get the show started. We'll bring Nick on. Smash that like.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
So. Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a breaking news.
All right, Mr. Brown, welcome back to Benzinga Live. How are you doing today?
I'm good. How are you? We're having some issues. Hopefully they're holding up for this show because it's probably going to be my final one for a while, but I think it will hold up.
Yeah. If you end up bouncing out of the stream with technical difficulties or whatever, you come back in, no problem. We'll be ready for it.
Yeah, a lot going on today. Just getting a news alert here. Biden is going to be speaking at the White House at 2:15. That is some in regards to the news we've been getting throughout the morning with student relief loan, student debt, how he's going to cancel it, some different figures. If you make less than 135,000, how much is he canceling? There's a lot of reporting. Now, I don't want to speculate on what the total is, but we're hearing between 10 to 20,000. There's a lot of figures going on, but Reuters is now reporting, or the White House is reporting, which Reuters is reporting that there's going to be a press conference at 2:15 this afternoon. So that's in anticipation, I believe, into what he may be saying. So I'm just going to leave those details to that, and we'll see what we get.
Got it. All right. So let's go to some company specific news, Nick. Of course, one of the big headlines this week has been on the Twitter front, the whistleblower.
Yeah, so we got some news. We got some news this morning relatively to some SEC filings that we're just hearing about from Twitter. Reuters is reporting, and so it's been a pretty active morning for Twitter. Just for some headlines, the SEC Division of Corporation Finance of Office of Technology sends a letter to Twitter's Parag Agrawal, that's the CEO of Twitter, and in that letter, it's dated June 15th. We're just hearing about it now, so this is something new. It requests disclosing the method used in calculating the monthly, daily active figures and underlying judgments and assumptions used. There's actually a Twitter hearing this afternoon at 1:30 p.m. In regards to some documents. Who's going to be rolling? That's going to be the judge, Kathleen McCormick. I don't want to say not interested, but very interesting to see here what she rolls on and how she rolls, because she has been rolling in Twitter's favor for a little while, but we're going to see what Musk and his team proposes. A lot of people are saying this whistleblower complaint does provide some case now to Musk. Not really going to say it's going to be a full out blown, he's going to have to buy Twitter. I think they're going to have to really look closely at the data. And I really think data here with this new whistleblower complaint, what we hear from the SEC in these filings, what Twitter says in the filings to the SEC, we're really going to have to pay attention closely, because I know Kathleen McCormick is really going to be paying attention closely to both sides. And I'm eager to hear what comes out of that hearing at 1:30 if she decides to push the trial back, because the trial right now is set for October 17th through the 21st. There is some reporting that potentially whatever they find today, the hearing could be pushed back a little bit, or they're just going to say, I think we're ready, and they're going to go for it through October 17th through the 21st.
Yeah, and I think so right now in here, let me go to Twitter stock real quick. So the stock is trading at $40. What's the buyout price is $54.20, correct, Nick?
Yeah, $54.20 a share. At this point, I really think the expectations is he's going to, a lot of people are thinking that I think Twitter is going to hold him to his agreement. I think the court is too, because there's nothing in the agreement about spam bots. There's nothing about spam figures that he's agreeing on. He's agreeing to buy it for $54.20 a share. And so my belief is that he's going to have to buy it for $54.20, where other people think the judge and the court are going to make him buy it for less. Not really sure how that's going to play out, that I'm eager to hear. And maybe today we'll get some kind of look to see what may happen with that.
Yeah, I mean, I don't know. I think right now on the there's so much uncertainty with there's like a million kind of different things with going on with the deal, whether you're talking about, the newest things with this whistleblower, the bot, where it's like all up in the air. But the bottom line is Twitter is going to try to enforce the deal at the $54. So it's all the big question is Elon, are Elon and his lawyers going to be able to prove, enough, I guess, like malfeasance on Twitter's end to really cause the deal to fall through? If not, this is a great arbitrage opportunity, right? A stock that's trading at $40.72 right now that could easily be a $54 stock come a few months' time.
Well, and it's too, I mean, tweeting memes, because Elon tweeted a meme yesterday about the whistleblower and trying to be funny. I mean, tweeting memes to me isn't really going to help your case. But let's be honest, does he really have a case? Because he's trying to argue these bots and these other figures, when in the agreement, it's just he wants to buy Twitter. It doesn't mention that he wants to make sure there's a certain amount of bots, there's a certain amount of figures. So really, to me, I don't even think Elon has a good case. Maybe this new whistleblower is the first part of his new case, but I don't think from how I'm reading it, what I'm reading in the agreement and all of the details coming out, I don't think Elon even has a defense.
Yeah, and I mean that's the biggest hole to me in the whole kind of defense has been, right, when Elon first announced he was wanted to or was going to buy Twitter. One of the things he talked about was bots and saying, I'm going to get rid of the bots. This is like one of the problems I'm going to fix. And then so if you are aware of that, then you come out later and say, I didn't know there was bots, or the problem was a lot worse than I thought. Like that kind of, I made the analogy earlier, right? It's like if you buy a restaurant that has a really bad flooding problem because you love the restaurant and know, okay, if I just fix this flooding problem, this would be a great investment. And then you buy it and then you try to get out of it saying there's the building's flooding. I don't want to buy it. It's like, you knew that. That's why you bought it. Like you said that. So, I do think that's, a case that's kind of a hole, kind of a weakness in his defense's case. Although, from the legal standpoint, you can just make the interview, or you can just make the argument saying, "Hey, we knew there was a bot problem. We didn't know the extent of it. Twitter has misled us. We want reparations here." So, I don't know. I feel like the ultimate conclusion of this case will be some sort of compromise settlement. I don't think it'll be like on either end of the extreme that Elon just gets completely off the hook or he's completely on the hook for Twitter. I feel like there will be some sort of maybe he does end up purchasing Twitter, but it's for a little bit of a cheaper price than that original $44 billion or whatever it was. I have no clue. I'm just speculating like we all can right now. But I'd be surprised, I think, to see it on either ends of the extreme side of the spectrum.
Well, yeah, but Benzinga Pro yesterday, I reported here on Twitter, there was some exclusive reporting that Dan Ives reported. He was talking to exclusively on Benzinga saying this just adds more fuel to the fire, this whistleblower. And Carl Quintanilla on CNBC put it best this morning. It's a saying that Nick Bilton used in his Hatching Twitter book. 3 guys who crashed their clown car into a gold mine. That's where we're at, because now we subpoenaed Dorsey, and we have 3 guys here battling. We have Dorsey, we have Musk, and we have Parag now all battling here. And it's like we have 3 guys debating, oh, yeah, I think we have a case. I think you should buy it. I don't think I should buy it. We have 3 guys that are just throwing so much fuel to the fire saying, we did this, but we didn't do this. And then, we did report this, but we didn't actually file it. We didn't actually say, okay, let's discover it publicly. I know Musk was tweeting about that yesterday, about that the board said something publicly but didn't disclose it to us. I mean, we just have 3 guys here just throwing so much fuel to the fire that at this point, I think, to my opinion, to really break down this trial, we would need more than 5 days, because there's just so many pieces to this puzzle that you can just say in just amount of time, where the list is like 10, 12 pages. I mean, we just saw that filing yesterday from Twitter or Twitter or Elon Musk. I don't remember who filed it. Another 10-page filing, who's granting what access to what. I mean, at this point, filings, however many filings we've had, Elon filing this, Twitter filing that. I mean, the pages are just so long that there's just so much fuel to the fire that you cannot dissect every piece. You just have to go to the big parts.
Yeah, and actually, so I see Hex Pony's comment in the chat, and yeah, Urban Farms Project. I think the stock itself has historically been just a very poor stock, but. Well, so Hex Pony's comment in the chat. Bots have been very present in our society as of late. Argument may not hold water. I don't exactly know, obviously, what Hex Pony is getting at here. The point is, but I was thinking about this too. If Elon's whole point, or maybe not even Elon, but if people in general out there that want to take this kind of like free speech absolutism approach to social media and Twitter and stuff, you would be against banning bots, because that is a form of, right? It's not like these bots came out of nowhere, right? They're like scripts by people that wrote. So it's like, that's regulating speech in some way. You're someone out there coded a bot to write on Twitter, to make these posts. And if you regulate that, that's regulating speech. So I would think that if you're a true free speech absolutist, you should actually be against banning the bots.
Right. I mean, we're going to have to really see, because it all depends how many followers you have for bots. Someone here said on my Twitter page, they have 60, I think they have 66 followers. And they said, based on who follows me, I would estimate 30 to 40% are bots. My question is, how do you classify someone a bot? What, they're just tweeting randomly? They don't tweet. I want to know. I don't know if Twitter, do we know if Twitter has a definition of what they conclude is a bot?
I have no clue. See, that's the thing, is I think you start getting really, hairy. I mean, what if, see, that's the problem. What if, right, you go into this trying to get rid of all the bots? What if they start banning people that are real people off there? And now someone's gotten their voice and their account taken away. That's where I think it does get a little bit hairy here. And I don't think it's as, and I think too, Elon probably, like, some of these changes that he would love to see on Twitter, one of those being more free speech absolutism, like, letting more stuff fly on there. Like, he might be learning more and more as he gets closer to this, that there are some, legal implications of this, that there are some, like, what he could potentially happen if he does, like, basically what I'm trying to say is that there are reasons some of these rules are on Twitter. Because some of them are unpopular. It's not like they do this to just, like, piss off people. It's like they do it to try to cover their own asses and stuff. So when they take certain people off and whatnot. So I don't know. It'll be interesting to see. Of course, when is the next, like, material update we'll get on this court case, Nick?
Today at 1:30 p.m. Eastern time. There's Bloomberg reported it yesterday. They're having some kind of court filing on some kind of document motions, I think, on what's going to be publicly available, what's going to be not publicly available to each side, I believe. Bloomberg reported it. There were just two short headlines that said Twitter hearing tomorrow, and then CNBC's reporting that the Twitter hearing today is at 1:30 p.m. Eastern time. So that raises the question, too, what's going to happen? Are they going to push back the trial? Are they going to keep the trial? What's going to happen in favor? What's going to roll in favor? So going to have to really stay tuned to the Chancery Daily, because I don't know if it's remote or they're in the court or who's allowed in the court. So we're going to have to stay tuned to the Chancery Daily, because I think whenever they had the last hearing, they had someone live tweeting. And so I think that's going to be today's case, is they're going to have somebody live tweeting what's going to be happening in the courtroom.
Yeah. I mean, I'm excited. I think, Nick, you and I, as both people who follow news and follow business news, as this court case develops, it should be ripe for headlines and news stories. So exciting there. I kind of hope that he does. I kind of hope the deal does go through, because I think Twitter, I mean, from both an app and stock standpoint, has just been very, very stagnant for a long time, right? If you think back over the last 3 years and Twitter's, like, biggest advancements and experiments, they've all been, I mean, okay, Twitter Spaces has been cool. I think for people that, like, loved Clubhouse, Twitter Spaces has been pretty cool. I don't think it's been, like, a smashing success for the company. Fleets obviously wasn't. They tried Fleets for a few months, took them away. They debuted, like, super follows and Twitter Blue Premium, and it's like all these things are just like, in a way, it's almost taking away from the product. It's almost making the product worse to me. So I hope the deal gets done, just in the sense that maybe we'll see some changes on Twitter. Maybe we'll see some, and hopefully changes for the good, not bad, but we'll see.
Well, yeah, but to that point, though, I believe Twitter Blue, I'm a subscriber to Twitter Blue because it was $2.99 a month. And I believe they're raising the cost of Twitter Blue to, I think, $4.99 now, because they sent an email, but for the people that subscribed or have had it for a while, it's not going to go into effect of October. But I mean, we're seeing rising prices. Super follows, it's $2.99, I think, per person, or $2.99 something. Because I don't do a super follow, but I'm eager to hear, if you're a super follow, do you have to pay $2.99 per person, or do you pay it or once you pay, you're a super follower to whoever has it?
Yeah, that's a great question. I mean, I don't know if we've heard a lot from Twitter. I can't imagine that this whole Twitter Blue thing has been super profitable for the company, but who knows?
But I mean, Twitter Blue does have some good features, like whenever you bookmark tweets, you can actually make folders. And I really think that's the only helpful tool there is, because whenever you have bookmarks, I like to set mine out and, like, separate them. But really, I don't see what the big deal is about Twitter Blue for $4.99 or $2.99 a month. I mean, you can change the app icon. I mean, okay, you can change it up a little bit, but then the temporary one goes away after a while. but I really don't see the big deal about super followers, Twitter Blue. I don't understand what their algorithm is, what they're trying to do. Are they trying to bring back people to the platform for people who go to Truth Social? I mean, Truth Social to me is another version of Twitter. It's just the truth and what Donald Trump wants to hear, what Trump people want to hear. It's not where Twitter where you can tweet anything and you won't be silenced to some extent. It's just copying one another and, just the form of it. Pretty soon, what are you going to have to, if you don't have Twitter, are you going to have to pay for Twitter to download it? I mean, there's some very unclear questions on what this outcome of the company is. And as a Twitter user, as a daily Twitter user, do you really want Elon Musk? Do you want somebody owning Twitter that says, I don't really care about the company? Do you really want somebody owning the company that really doesn't care? And what's going to happen with Parag? What's going to happen with Twitter employees? What's going to happen with the business in general? Are they going to be able to remain profitable? I mean, there's just so many unanswered questions that are very valuable to this company that's really not helping his term, the 5420, and that's not really helping the stock term in general. Is this company going to be able to live through the Elon Musk saga? So there's a lot of unanswered questions that need answered soon.
Yeah, and obviously we don't know any of those answers. I will say if Elon does take over control of Twitter, I doubt Parag Agrawal remains as the CEO. I mean, at least based on their interactions, Elon's and Parag's up to this point. OP's comment: will Tesla iBots be allowed to open an account? That's also the funny aspect. Like, Elon loves robots, doesn't he? Like, he should love the bots. But all right, let's move on from Twitter really quick. I've got Peloton's chart pulled up real quick, up 20%. Air Stocks Market posted in the chat, Peloton rocking the deal with Amazon. So we can, I'm looking here in Benzinga Pro, we can see the chart, up 20%. Go down here to the news feed, 8:30 a.m. Eastern. We got this news on Benzinga Pro. Peloton strikes a deal to sell fitness equipment and apparel on Amazon. So, it sounds like Peloton's probably been in talks with Amazon behind the scenes for the past few months, finally cut a deal. Probably good. I'd imagine Amazon had a lot of leverage in these negotiations, basically saying, okay, you want to sell your, treadmill on Amazon for $1,000. We get, 20% of that or whatever. So either way, great news for Peloton shareholders or anyone who might have been buying this stock down here at $8-9. We say skyrocketing. I mean, up 20%, up to $13. But if you look at the chart here on the daily, we're still, more than 50% off of the March highs, let alone where we were at last year. Nick, have you been following this Peloton headline at all?
Yeah, so I believe we get Peloton earnings tomorrow. I believe we get Peloton earnings either tonight or tomorrow, which is
tomorrow before the market open.
Okay, tomorrow before the bell. So that's good. And Deirdre Bosa of CNBC actually raised a good question, in my opinion, on this news. She says, is this really good for Peloton investors? Amazon has its own ambitions in health and fitness. Instead of acquiring Peloton, now it can learn about its sales customers without buying it. And then she goes on to note, not selling on Amazon, a luxury that only the best brands can afford, which is Nike. They won't sell directly to Amazon anymore, as CNBC reported back in November. So I'm eager to hear that. Is the wait time going to come down if you have Amazon Prime? So there's some, I don't know if they detailed that, but no, I mean, what, does it go down a month or does it go down, hey, I'm going to get it within a few months instead of a few years? But I mean, hey, if they scored it, hey, maybe this is going to generate some more cash flow. So maybe we'll hear tomorrow morning in the release when they report what they say on this Amazon deal, and maybe they'll answer some more questions.
Yeah, and I mean, that's a great point. I forget exactly who you said brought that up on CNBC, but that's where I'm saying I think Amazon really had the leverage here in these negotiations, because when we look back at Peloton's chart right here in January 2021, when we were less than a year into COVID and everyone was working out from home and Peloton was this huge fad, they didn't need to sell on Amazon. In fact, they weren't selling on Amazon. And there's a reason for that. Like you said, there's a reason Nike doesn't do that. It's better for Peloton. It's better for Nike's profit margins to not sell on Amazon. But then when your product kind of falls out of favor, your sales are down, your stock goes from $170 to $8, you start saying, hey, maybe we should cut a deal with Amazon. They have a lot of users. They have a lot of customers. So, yeah, I think that's a really salient good point, that great news in the short term, of course. The stock's up 20% today. You can see the volume here. We've already had about 53 million shares traded today, compared that to 15 million all day yesterday. But in the long term, what does it mean? So we'll keep watching the Peloton story. I've been bearish this company for very, 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 very long time. Wish I would have made some more money on it, shorting it up here, but hey, it is what it is. And yeah, I'm still not bullish this company, even down here at $13.
Yeah, and while we're crossing, there is some news crossing. Probably Benzinga Pro has it. CNBC is reporting Apple sends invites for the September 7th launch event. New iPhone 14 expected. This press event will be happening 1 p.m. Eastern time. The launch will be streamed on Apple's website and YouTube. Apple has held virtual pre-recorded launch events since the start of the COVID pandemic in 2020. Apple could also announce new Apple Watch and AirPod models at the event. The company is reportedly preparing new Mac and iPod models as well, but those are sometimes announced at a separate October event. And Apple is expected to release 4 new iPhone models that will likely be called the iPhone 14. The new devices will have improved cameras, and the more expensive iPhone 14 Pro versions could have a smaller pill-shaped cutout on the top of the device's display versus the notch that the current iPhones have, and will be reportedly include always on displays.
Yeah, that's so what's the big takeaway from you here?
That I really think is they continue to develop the iOS beta software, because I know there are some people that have this beta software stuff. They are expressing that Twitter has been crashing in the new iOS beta software, but I just don't think it's about the iPhones. I also think it's about the software and how they develop it and what they develop. Because my friend, literally, that we talk to each daily, he's actually on the iOS beta, and so he keeps me updated on the newest updates. And I think it's pretty cool that they're trying these new things on how the layout is going to go. There's just a new song feature here. I have the iPhone 13 Pro Max. There is just this new song feature I just figured out about through a CNBC article, that once you can start playing a song, you can literally scroll down, and it's called music recognition, and it will do the music for you instead of using another third-party app.
Wait, explain that again one more time. I'm confused on the song thing.
So there's this new feature here on the Apple. So once you scroll
it's like
down,
it's like Shazam. You're saying that you can ask your phone what song's playing and it'll tell you?
Yeah, it's literally you just hit the button and it just does music recognition, and instead of going to a third-party app, it's literally right on the Apple device. I just figured it out. I didn't know when they added it.
Interesting. Yeah. So let's see. So we've got we went through the Twitter news. What else do we have on the docket today, Nick?
So we had some earnings last night, so I think we could roll through those. Shares of Intuit are higher after beating expectations, posting they did beat expectations. Adjusted EPS for Q4 $1.10 versus 98 cents. Net revenue $2.41 billion. Estimate was for $2.34 billion. Product revenue $271 million. Estimate was for $356 million. 2023 forecast, they see adjusted EPS $13.59 to $13.89. Estimate was for $13.89. Sees revenue $14.49 billion to $14.7 billion. Estimate was for $14.57 billion. Sees small business and self-employed group revenue plus 19 to 20%. Sees consumer group revenue plus 9 to 10%. And for the first quarter forecast, they see adjusted EPS to $1.14 to $1.20. Estimate was for $1.86. I think this is just some kind of sign of relief, saying, hey, we see what's going on here. They think they can do better. They see Pro Reconnect revenue 3% plus 3%. Intuit sees 1Q revenue plus 23 to plus 25%.
And that was Intuit, right? You said?
Yep, that was Intuit.
Let me get that chart pulled up real quick. I don't even know. Intuit up about 5% today. Looking at the chart here, so I think Intuit's so interesting because the fact that, like, I don't know, I use TurboTax myself, and it's just so easy to do your taxes. It shocks me that this stock even draws down at all. It's like everyone's gonna still have to do their taxes, right?
Yeah, I guess. I mean, I think That's why I think Christina Partsenevelis on CNBC, when she did that report yesterday, I think she cited that's why they beat on a little bit, because it's tax season. Tax season. That's when a lot of people go to Intuit. But it was interesting that they beat another earnings, or actually another one we could do that we could hit while I have it up is Bed Bath and Beyond. There was some news last night that the Wall Street Journal scooped up, and I quickly reported it here on Twitter from the Wall Street Journal. Bed Bath and Beyond clinches a loan deal, sources say. Bed Bath & Beyond selects lender for the first in, last out deal, sources say. Troubled retailer has been seeking $375 million in loan. In the Wall Street Journal article, they say that the company on Tuesday told prospective lenders that it has selected a lender to provide a loan following a marketing process conducted by JP Morgan Chase. People familiar with the matter said. So Bed Bath & Beyond shares are higher today, but it was just interesting where it went from the Bed Bath & Beyond Ryan Cohen saga to the yay, Bed Bath & Beyond is back. We're back. So stock is higher last time I checked today.
Yeah, stock is still trading up about 13.8%. Was higher than that. Was up about 20% earlier here. I'll go full screen on the chart here to let folks really take a look and just see how crazy this stock has been over the last month or so. But yeah, we'll keep you guys apprised of any new Bed Bath & Beyond headlines. Nick, we haven't heard from Cohen at all publicly, have we?
No, we actually have not heard from Cohen publicly, and we're eager to hear if he ever speaks out, maybe when GameStop reports earnings. But no, we have not heard from it. There are actually no expectations that we do hear from him. So it's eager to hear that this company, how Bed Bath & Beyond is doing. And then there were some reports, Carl Quintanilla, Jim Cramer, David Faber on CNBC this morning were talking about Bed Bath & Beyonds and the Targets and the Walmarts of what happens and who closes if Bed Bath & Beyond does end up closing. Who benefits? Does Walmart benefit? Does Target benefit? Jim thinks Target is going to benefit because I think how he said it was that there was going to be that their Targets are closer to Bed Bath & Beyond's than Walmart's, but there are Walmarts that are close to Bed Bath & Beyond. So there are really some expectations here. Does this company continue, or what happens? Who benefits? Target or Bed Bath & Beyond? What really happens? Some expectations are that Bed Bath & Beyond does continue to stay, but in the long run, who knows? This deal, even though they say clinches the loan deal, you never know. In 24, 48, however many hours, it kerplunks and the deal ends up breaking, and what happens next?
Yeah, definitely. I'm just pulling this up from Twitter because this came across my screen. This came out really right as we were starting the show at 11:32 a.m. Eastern from the President of the United States account from Biden. In keeping with my campaign promise, my administration is announcing a plan to give working and middle-class families breathing room as they prepare to resume federal student loan payments in January 2023. I'll have more details this afternoon. So some more details here. $20,000 if you went to college on Pell Grants. Of course, Pell Grants, federal grants for people, for families that make under a certain amount. $10,000 if you didn't receive Pell Grants. Forgiveness only applies to those earning less than $125,000, which, so mean testing policies like this is very controversial. I mean, I think, that was one thing that the administration and the Trump administration did well, I think, with the COVID stimulus is there wasn't really a mean test, right? It wasn't, okay, if you make this amount, you're not getting your check. Because that can send the wrong message to a lot of people, right? They're like, oh, well, I'm paying my taxes and now I'm not getting anything back from it. So, but you also have the issue here with the student loan debt that's kind of similar is you have people that haven't benefited from going to college that aren't going to benefit from this. So some people out there are criticizing this move, saying it's going to help people that are already on the higher income spectrum because they went to college. So this stipulation saying only less than 125, I don't necessarily love, but I think or hate really. I don't know. I don't really. I think it's fine probably, right? Because I think for the people that are against it, at least you can turn around and say, hey, well, we're not giving it to people that are already making this much money, so we're saving some money there. Student loan pause extended one final time through the rest of 2022. If you have undergrad loans, you can cap repayment at 5% of your monthly income. Okay. So, yeah, it sounds like he's going to give some more details this afternoon. Obviously, very controversial, very polarizing because, some people, don't like it. Some people love it. I don't know. I think right now with the income inequality we have in America, anything we can do from a governmental standpoint to aid to take some pressure off people that are like not earning a lot of money is something that will go a long way in our economy, in my opinion. And people disagree with that, and that's fine.
Yeah, and people were speaking on Twitter saying, "Oh my, inflation is still roaring. So what is this? The 10% Inflation Reduction Act? How is this going to work?" But no, I really think it's interesting because we've been hearing through some many developments saying he was going to cancel it 1 week. He was supposed to come out and make the announcement. Then they were holding back on it. But I really think today the reason why he's making that announcement, Aaron, is because a lot of Democrats, I don't want to say a lot, but there were a lot of Democrats that actually won primary races last night in New York and around the world, that all of a sudden we were expected to say, oh no, the Democrats, they're losing the House. It's supposed to be the Republicans from the reports. But I really think he's coming out to make this announcement. One, because a lot of Democrats prevailed against Republicans, and what's going to happen for midterms? Are they going to be able to prevail again? Like Jerry Nadler of New York beat his long-term friend for 20-some years. And so there's some speculation around that. And two, today marks, I believe, 6 or 7 or 8 months of the Russia-Ukraine war. It's been a long process. Where he announced this morning 2.9 billion aid package. That's the highest ever so far to this date. With that new package he announced this morning, and there was some comments. The outgoing UK Prime Minister Boris Johnson, he's actually in Kiev right now. And he did hold a press conference with Zelensky. Zelensky says he would pull out, he would be done. He would pull out the blood once Russia is done. So there are some talks regarding that. There's some talks with the oil cap with Russia. There was a lot of developments this morning, but I think the reason why he's making the student debt loan is because Democrats prevailed last night, and it was an unexpected victory in many states. That's just my reason. You could disagree with it. It could be, or it's just
Yeah, I mean, I think as far as saying that last night the primaries are why he announced it today, I think a lot of, it was expected even before the primary results last night that they would announce this today. I will say, it is really interesting to your point, Nick, like looking at kind of how unexpected. And so this is website predictit.org. This is a website you can buy and trade essentially the odds of political results. And I love it because it's not really, it's so objective, right? It's just the free market buying and trading. So if you think, oh, the polls are bogus, Dr. Oz, the Republicans we're looking at the Pennsylvania Senate race, which Nick, you're in Pennsylvania, correct?
Yes, I'm in Pennsylvania. Both have been very exclamatory. Both have been very vocal here. I know the Pennsylvania governor who's running for governor, Senator Doug Mastriano, he was in Pittsburgh over the weekend, along with Florida Governor Ron DeSantis. There's a lot of parties here. There's a lot of other governors trying to support each other. Fetterman and, with the Oz and the grocery store thing, there's a lot of developments here. It's very political. Like Dr. Oz didn't know how to pronounce the one grocery store with inflation. He's saying that maybe if Oz ate a vegetable, he wouldn't have a stroke. And Oz is countersuing. Oz doesn't have a house in Pennsylvania. He just bought one. He actually lives in New Jersey, that he filmed the ad for Pennsylvania in New Jersey. It's just a very funny situation of what is coming out of these debates.
And I think, so the point I was going to make is what I like about Predicted. It's so objective. It's just trading on the free market. So if you go back to June here, it was actually Republicans were the favorite. So how it works essentially is you can buy. So it's a binary outcome, right? It's either going to be which party will win the U.S. Senate election in Pennsylvania will either be Democratic or Republican. If you want to buy Republican, you can at 26 cents on the dollar. So say you buy one share at 26 cents, Oz ends up winning, you get to sell that for $1. So you times that by 100, you can make some good money if you end up betting on an outcome that's seen as unlikely. So in the last 2.5 months alone, right, Oz was the favorite. Republicans were the favorite trading on the free market on Predicted, up 56. And in the last 2 months, you've seen Fetterman basically be on a stark uptrend, and it's basically been like that across the board. I think been a lot of backlash for obviously a number of different reasons, and not to really the bottom line is that it is, right now, like the not investment advice or whatever, but there are some interesting trade opportunities out there if you think like these things are getting priced in wrong or whatever. So I'm going to continue to be, watching the predicted markets and honestly active on there. So if people are interested in that, I'll be willing to share some of my trades and whatnot on there. So over the next 3 months, you'll be seeing a lot more political headlines and whatnot. So Predicted makes a fun, cool way to be able to trade it like it's the stock market.
Yeah, there is some breaking news here on Twitter. If you can pull the chart back up, Reuters is reporting Twitter CEO tells staff the whistleblower complaint is, quote, foundationally, technically, and historically inaccurate, end quote, in an internal meeting. These are just details coming out from Reuters. Not seeing anything else regarding that headline. But if I do, I'll continue to tweet it out. But no, there's just more news coming out of the internal meetings, internal memos. So this was something interesting. This was very unexpected. We didn't know about an internal meeting. No news outlets have reported it. Reuters, Bloomberg, CNN, Washington Post, Wall Street Journal. Nobody has really said that today there was an internal meeting. So this is something interesting that in an internal meeting, he says that the whistleblower complaint is foundationally, technically, and historically inaccurate. So Twitter CEO himself has spoken. He spoke yesterday in a email that CNN obtained that, just reiterating that the work is going to be hard. And so, this is going to be very interesting to see how this plays out. Twitter stock at last check is down. So it is very interesting to see how this plays out because we have that meeting today. Okay, so it is up now. I've been clawing back some losses at 40.43, still long away from 54.20.
Yeah, I mean, and that's why I think is interesting here, just this potential arbitrage trade. If you think there is, a good chance that Twitter is able to push the deal here through. So yeah, again, I mean, we'll know apparently more at 1:30. Some updates here. Let's see. Just catching up with the chat. Tiny Pie saying Nick is like the human manifestation of Benzinga Pro. Love that. Jay Rice saying no conservative will answer poll with 87. And that's what I was saying with Predicted. I think that's what makes it so interesting is there are a lot of people out there that don't believe the polls, that don't believe that Democrats really are trending to, win the midterm elections in 2022. So if you're in that camp that doesn't believe that, there's a very interesting trade opportunity out there to buy these outcomes at literally pennies on the dollar, at 22 cents on the dollar. So again, we'll keep monitoring those Predicted markets there. Really a cool site. Apparently they were getting shut down, but now they're not. So we'll see. I guess people, that can be polarizing in itself, right? The ability to bet on the outcome of political events. Shelly said my ex lost 40K and predict it. That doesn't seem like a smart investment move. Now what we're trying to do here on Benzinga Pro. Tiffany's saying, what about people who worked and paid off? Yeah, I don't really want to debate too much about the student loans. I would just say that I think you could say that about a lot of things, right? There are a lot of really, really popular policies out there, right? Like even like what about like free lunch at public schools for kids whose families, for a lot of kids, that is literally the most nutritious meal they get throughout their day is what's not even really a good like free school lunch program. But you could say that about that too. Like what about the parents who are paying for their kids' meals and then these other kids get free ones? That's not fair. I don't know. I just think, I don't know. Again, I don't want to get too political here, but I don't know. I feel like you can say that about a lot of things. So if really it's that upsetting to you that people that are already not making a lot of money, that are in debt, are getting helped out a little bit, then I don't really know. But all right, Nick, let's get back to the stocks. Tesla. So the Tesla split is supposed to go into effect when? Today? Tomorrow? When is this happening?
I believe it goes in effect today after the close, and they split Monday, I think. I don't know. Hold on. Let me double check that. Come on, Benzinga Pro. I think Benzinga Pro had something along those lines this morning. I wasn't really paying attention. Let me see here. Quickly pulling up here. No, Tesla stock split. I believe it goes, after the market closed today. It's set for a 3-for-1 split. It will be, let's see here.
Pritam Jag Tap in the chat saying tomorrow.
Okay. Well, this CNBC article has Tesla stock set for a 3-for-1 split after the market closed. So yeah, it's okay. So it says Tesla shares will begin trading on a split adjusted basis on Thursday. So they split today after the close. There's just so much going on here. You just can't keep track. And so I think Jay Wood says if it does, wherever it closes today, it should roughly trade around $300 a share, give or take whatever it does move today. Because we can have intraday swings that take us from high to low real quickly. We've seen that a lot at 3 o'clock, where sometimes we move higher, sometimes we move lower. Really all depends on the internals and what news comes out. So we're gonna have to really watch that. $300 a share. Now, do you think, Aaron, does it get back up to 900? Does it trade lower? Does it trade higher? I really think it all depends on this Elon Musk saga and Twitter, what really happens. If he does buy Twitter, does that draw him away from the company? Is he going to have to appoint a new CEO? What's really going to happen? There's some looming questions that we're waiting to hear about that too.
Yeah, I don't know. I mean, I think so. I actually wrote an article yesterday, or published an article, and we discussed this on the show, going back and just looking at how zero insiders at Tesla have bought the stock over the past 2 years, just been strictly sells. And I know, they have different options to get Tesla stock, but it's interesting because that didn't seem to deter insiders in the past, right? If you look back in 2016, 2017, 2018 from buying additional shares of the stock, which it's not, to me, something that I think is like a buy all, be all, end all. What insiders are doing are like that important to the stock price. But I do think that it raises a it raises the red flag to me, that in the sense, not necessarily that these insiders don't believe in the direction of the company or don't believe that Tesla's going to continue to grow, but that they fundamentally might believe that the stock is overvalued at this point, that there's not a good reason to buy more of it right now. So I don't know. That was one thing I've been watching with the stock. I do at the end of the day, I think across the board, I think the street knows that fundamentally, if you're digging into the fundamentals of this stock, that it's overvalued in a lot of traditional senses. But it doesn't really matter, right? The share price of Tesla is going to be the supply and demand of the stock, and there's demand out there for this stock. There's demand out there for it at $900. So it's going to split 3-to-1 back down to 300.
Yeah, so I did confirm it from the Wall Street Journal. They say the split its stock 24th, so it will end today. So it will split, and then it will split adjusted basis. It will start trading on a split adjusted basis August 25th. So what does that mean? An investor who owned 10 shares of Tesla before the split would own 30 shares after, with the share price divided by 3. So nowadays, investors can also trade partial shares of pricey stocks. Client of Charles Schwab, for instance, can buy a fraction of a share of S&P 500 companies for as little as $5.
Wow. Yeah, I don't know. I mean, OP saying the point is to allow Tesla employees to get lower bonus options. I'd imagine that if you were, promised or you signed an option for, say 100 shares of Tesla and they do this split, you'd be eligible for 300. It'd be pretty hard to imagine they'd be able to get away with that, if that's what you're saying is the case behind the split. I have no clue, and maybe that would also affect the executives, Elon and whatnot. But certainly will be exciting to watch Tesla. Wait, OP saying Tesla is undervalued. It has the best financial indicators on the street. I don't know, man. I think if you go through the fund, right, we can do it right now. We'll look at it right here. Its price to sales is 15. Go to Google. What is the average price to sales ratio for? Should we do S&P or any stock of S&P? Let's do S&P 500. The mean is 1.67 and Tesla's is 15. So that's just saying it's expensive. I'm not saying it's not a good, it can't be a good investment. I just said that the share price is going to be determined by the supply and demand. I'm just saying, to say it's not overvalued from a fundamental standpoint, I think it is. And I think that's a consensus on the street. It just doesn't really matter. Oh, Jay Rice was saying that was sarcasm. I don't know. I can't read sarcasm on text. I'm sorry. All right, Nick, I got to let you go for a few minutes, but like I said, you can hang out backstage. Are there any final news stories or anything you wanna chat about? We've got about 2 minutes left.
Yeah, we can hit Nordstrom earnings. They reported they reported earnings last night. Company, last I checked, shares are higher, shares are lower by 18.5%. EPS came in 81 cents, beat expectations of 80 cents. Total revenue came in better than expectations, 4.1 billion. Estimate was for 3.99 billion. Brand net sales came in 2.77 billion. Estimate was for 2.67 billion. Net sales plus 12%. Estimate was for 8.52%. Gross margins came in just a tad bit lighter than expected, 35.2%. Estimate was for 35.3%. Sees their full year revenue plus 5 to 7%, guiding lower just a little bit. Saw plus 6 to plus 8%. Toll Brothers, we can hit Toll Brothers really quickly. They reported earnings last night, and EPS was last time I checked, Toll Brothers were higher by about 3.4%. Toll Brothers Q3 earnings, EPS came in 235. Estimate was for 231. Revenue was for 2.49 billion. Came in at 2.49 billion. Estimate was for 2.52 billion. Total home sales 2,414. Really came in below expectations. Estimate was for 2,756. Deliveries 2,414. Estimate there was for 2,756 per some estimates. Backlog 11.19 billion. Estimate was for 11.96 billion. Adjusted home sales gross margin 27.9 billion. Estimate was for 26.8 billion. Sees full year adjusted home sales gross margin 27.5%. Some commentary from the release from Toll Brothers himself says that we now expect to deliver between 10,000 and 10,300 homes in full year 2022 at an average price of approximately $920,000. We also reaffirm our full year adjusted gross margin guidance of 27.5% for full year 2022. Based on the strong pricing embedded in our 11.2 billion backlog, we expect continued gross margin expansion in our fourth quarter to 29.2 billion or 29.2%. And really quickly before I go backstage, Urban Outfitters, they reported earnings, net sales 1.18 billion. Estimate was for 1.19 billion. Gross margins 31.7 billion. Estimate was for 32.4 or 31.7%. Estimate was for 32.4%. Inventory 697.5 million. Estimate was for 561.1 million. Urban Outfitters net sales 396.4 million. Estimate was for 413.4 million. And Urban was higher last night, but it all depends on the conference call. We're seeing a lot of these stocks come in. I don't want to say they reported a lot better than expectations, but I really think that inventory number 697.5 million, estimate was for 561.1 million, really goes to show that a lot of these companies have backlogged inventory, and inventory continues to spike as they continue to order more for the holiday seasons. We're gonna have to really see how these plays this out. Urban Outfitters, Target, Walmart, Lowe's, Home Depot. We're really gonna have to see how this backlog development situation holds up.
Yeah, I mean that's been going back to Target's first kind of bad earnings report that sent the stock down 23%. That's been the story for retailers across the board, has been inventory woes. Nick, before I let you go, quick little trivia question. So Nordstrom, stock's down 18% today. Got it pulled up here on Benzinga Pro. Nordstrom, the ticker is JWN. Do you know why?
No, I don't.
It's a founder's initials. I believe it's John W. something Nordstrom. So I've always wondered that.
Well, that's really cool. Okay, because I was interested last night when I was trying to look up the ticker Nordstrom. It was JW, and I'm trying to think, why is it JW? Okay, no, so that's something on my radar. I'll keep tabs of, because that's very interesting how they made it the ticker JWN. Okay, something new. So thanks for that trivia question.
No problem. The more you know. All right, Nick, I'll hang out backstage and I'll bring you back on in a few minutes.
Perfect.
Alrighty. Alrighty, y'all. So we're going to bring on Amicide, ticker AMST, CEO Dr. Anne-Marie Sastry. Going to talk to her about some really cool developments with the company. The stock here, I'll get it pulled up on Benzinga Pro. Up about 7.5% today. So cool. Good day to bring Anne on. Without further ado, let me go ahead and so here, I'll get this ticker pulled up for you guys. AMST, again, up 7.68% today. Without further ado, let's go ahead and give Dr. Anne-Marie Sastry our special intro and bring her on the show. Hi, Dr. Sastry. How are you doing today?
Hi, Aaron. How are you? Please call me Anne-Marie.
Okay, Anne-Marie. So I noticed while doing some research in the company, we're right downtown here in Detroit. Are you over in Ann Arbor?
We are. Actually, we're all over the place. We run this completely distributed business, and we've won 10 Workplace Excellence Awards by doing it that way. So awesome crew, and great to be here today.
Beautiful. Well, always good to meet some more Michigan companies. So before we get started, do you want to just give some background on the company, give our audience some, let them know exactly it is what you guys do?
Yeah, absolutely. We're an artificial intelligence software company, and we deliver learning for any organization that wants to deliver it. So we're a software platform licensed by universities, businesses, museums, and government so that they can deliver learning. We use artificial intelligence to make the experience awesome. And we have a 98% retention rate. That's 98% of people who start an Amicide powered learning experience finish it online.
Wow. That's incredible because I've done, a few online educational stuff myself and can certainly say I haven't finished all of them.
It can be a little boring, right? But with artificial intelligence, with the right technology, you can actually talk with your peers. You can jump into a video chat. You can get served up content that's relevant to what's being taught. So it's a very strong motivator to stay because you're getting value.
That's amazing. Yeah. So what was the impetus to start the company? Was it founded by educators that found a lack of good technology in the learning space? What was the real reason that it was like, okay, we need to do this?
The real reason was I used the products that preceded us and I didn't like them. So I was a professor for a long time at University of Michigan for 17 years. Then I started a company, became very successful. I sold that company and then decided to start this company to remedy this because any organization that delivers learning online has got to have the right tools. That last mile matters. And so instead of trying to boil the ocean and sell learning products to everybody, we decided to found this company. I'm the founder, to serve all of the organizations that deliver learning so that they can do a better job. And actually, just yesterday, we announced a partnership to do so right here in Michigan.
Yeah, I was just going to get to that, the exciting announcement. Do you want to go ahead and give us just kind of the details on that?
Yeah, thank you. It's with Central Michigan University, 13,000 undergraduates, 240,000 living alumni. It's a big talent generator for this region. And they are starting a bold new program to go online with professional learning. And they selected Amicide to do all of this work with them. And that's very exciting. This is how Amicide scales. And this is because it's how we generate revenue for our partners. So our partners know that learning is not just, 2 years of community college, a boot camp, or 4 years of a degree program. Learning is lifelong. You need to be able to pick up skills all the time. And the most efficient way is to do that online. But in order for people to finish the experience, it has to not be terrible. It has to be a good experience. So by delivering value, universities are able to drive revenue. And of course, we're a SaaS business. So our position is, in this ecosystem in the very high margin, high scalability zone.
Yeah, and it's so funny too, like being a couple years out of college. It's like now that I'm out of school, I'll see, the title of some course and say, oh man, that sounds really interesting. Like I want to take that right now. Even when 2 years ago when I was in school, I probably wouldn't have wanted to take that. Now I do. I think that it's just really interesting, like you said, how so Central Michigan has about 13,000 students now, but like you said, over 200,000 living alumni. There's that whole. What's the actual, what percentage of these people out of school are interested in doing some sort of education, learning online after the fact?
Aaron, it's almost everybody. Almost everybody wants to be a lifelong learner, just like you. You look at a course title, you say, wow, that's interesting. So what would enable you to take that course? Well, the course would have to be good. It'd have to be interesting. And it has to be accessible, meaning that it has to be online. almost all learning for professionals is going to be online, and it almost is already. These numbers are staggering. If you look at the numbers of living alumni of universities alone, there are 10 to 20 times the number of alumni as there are matriculated students. So to your point, Central Michigan is an example of that. Over 240,000 alumni, 13,000 matriculated students. How do you get to that market? You deliver a product at a price point that makes sense using technology that enables it. That's where Amicide comes in. We brand to our partner. So we set up systems that are branded to the university, to the museum. Henry Ford Museum, very famous, is also one of our partners. And that allows them to sell products at an accessible price point that actually scale, because the experiences are good. The experiences are good.
Yeah, and so something that I'm also curious about, and I'm just kind of thinking out loud here, is like for maybe a lot of college graduates who would be interested in learning. Like I'm thinking like I probably wouldn't take another calculus course, right? If you presented me like an advanced multivariable calculus level 2, whatever, I'm probably not going to go back and put myself through that.
It's
but
kind
maybe
of
more
hands only kind of a situation. Yeah.
Right. But maybe more like things I could use in my practical life, like maybe like a cooking course, like maybe like some of those like elective courses I didn't do there, I think would be really cool to go back and learn. What I guess my point or question is like, what is the nature of a lot of the educational content that's focused on post-college graduates?
That's the beauty of Amicide's platform. We are extremely flexible, extremely scalable. We stand up services in 24 hours, and we teach basically anything online. We have taught everything as diverse as managing conflict, managing remote workers, interpersonal communications, all the way to AI for executives. You can teach anything on the platform because the platform is AI driven and the platform is tech driven. So you're not only learning from an instructor or consuming materials, but you're also able to interact with peers. People don't want an educational experience. You don't want an educational experience where you're alone in a silo flipping through PowerPoints. You want to be able to engage, to comment, to be active. Over 50% of workers learn new skills from their peers, not from a book, not from a YouTube, but from their peers. Amicide's platform enables that because peers can actually engage with each other. So it's a very exciting time in quote unquote EdTech, because the notion that it's going to be sort of boring, siloed, take your medicine kind of experience, not true anymore. Streaming video, social media sped ahead and left education in the dust. Amicide is here to answer that with a platform that anybody who delivers learning can use. And as with Central Michigan University, we're closing bigger and bigger deals now. And we're super excited to be able to generate these kinds of revenues and have this kind of impact.
Yeah, well, Anne-Marie, you'll have to let me know if there's a course on Amicide on how to hit a golf ball straight. I'll definitely tune in for that one.
I might take that one before you do, Aaron.
Okay. So from a business standpoint, you mentioned the deal again with Central Michigan. I know for a lot of I guess educational service companies or educational SaaS companies, when you get these deals with especially the big state universities, one good thing from an investor standpoint is a lot of times, right, it's not really easy for a lot of these schools to just get up then and switch to a different program, right? Have you guys found that once you have a school contracted, that they tend to stick with you guys?
That's a great question. We tend to be a pretty sticky solution, we believe, because the experience is great. We have an easy business model. It's a setup fees plus license fees plus per user per month. So very easy SaaS model to follow. You don't have to dismantle or take down other systems. And because of our security and privacy policy, we're really easy to license. Amicide not only doesn't sell data to third parties, we don't share it with third parties. We don't think you should have to trade your data for an education. That makes it really easy for people to partner with us because they don't have to wonder about how we're actually driving revenue. We're driving revenue very transparently by offering a product that makes sense. In addition to Central Michigan and Henry Ford and Wayne State, in the Detroit region, we've also then been able to bring on partners around the country. For example, like you said, big university, City University of New York is now a partner delivering professional education there. They know that there are 13 million jobs unfilled in the United States of America right now because of skills gaps. It's like ridiculous. These people aren't uneducated. They need a set of skills to get the next position. So by offering these just in time online, it enables people to economically advance. And universities are catching the fever for this. It's really, really an exciting time.
Yeah, and so can you break down exactly, because I might just be a little slow here. I'm having trouble exactly picturing like how does a museum utilize your platform compared to, a university?
Great question. So when you think about museums, fundamentally they're learning experiences. You probably remember your museum trips more than you remember like a Tuesday afternoon in, Miss Jones' math class, right? They're,
100%.
they're totally pivotal experiences. They're totally mind-opening, sometimes mind-blowing experiences. Museums need to get online. They need to have digital experiences for people because everything else is online. There's virtually no important experience now that doesn't have a digital twin. We partner with museums so they can offer learning programs. Museums do a lot of work in teacher training. They offer learning programs to patrons, to children. Amicide comes in and says, look, here's your ecosystem. It comes with an e-commerce solution. So if someone sees an ad for a museum, they can click to the e-commerce, they can buy the learning experience or subscribe to the museum, then they can go consume the experience, and they can talk with other patrons, they can talk with a docent, they can talk with an expert. It's all branded to the museum. That's part of the key to this. That we're not trying to boil the ocean and sell more kinds of learning products that we think ought to exist. We're helping organizations that already have large cohorts of dedicated learners, employees, or patrons, and giving them the ability to license our system and scale out of the box on their own brand.
So it's essentially like, Miss Jones in Albuquerque can take her class through a Smithsonian experience with Amicide instead of obviously having to take a field trip to the Smithsonian. I don't even know where the Smithsonian is.
It's
DC?
in Washington, D.C., but
okay, I guess, right.
No, it's a great question because actually the Smithsonian Institution has lots of partners. Our partner, Conner Prairie, is a big living history museum. It's sort of living history like Henry Ford's museum, and they're outside of Indianapolis. Big museum. We're their sole partner in scaling up their online learning. We just had that big announcement some weeks ago. And a lot of people want to visit a museum, but they can't because they live far away. Instead, they can consume a digital experience. They can become a digital member. They can get insides behind the exhibit, white glove experience for fundraising, all kinds of things that you can do if you have a branded system. What they're not going to do is say, hey, go to YouTube so we can make $0 on that. What they want to do is drive revenue so those experiences become sustainable because they cost money to deliver. Amicide, as a software company, is targeting high ARR and high margins because we enable that. We do that work for our partners.
Yeah, I love that. I mean, going back to, the college side of the business or university, is the eventual like end goal to take on, like Blackboard and Canvas, or do you see it as kind of a completely separate product than what those companies are offering?
It's a great question. We haven't had to have our partners throw off existing solutions in order to license us because there are these huge unmet needs right now in professional learning. Wayne State's a great example. CUNY's a great example. The museums are a great example. There's a huge unmet need in new learning programs that are affordable and accessible and great experiences. Eventually, we think those companies could become customers to us, or we could win their business. They can become customers to us because out of the box, we white label. So we can easily become the premium solution for any company, including another software company. It's interesting when you think about innovation, Amicide has placed itself as an AI software company. Of course, we've utilized that technology because it helps people have a great experience. You know Kathy Wood, of course, at Benzinga. Kathy Wood started a foundation called Innovation Foundation. They selected Amicide to deliver all of their learning programs.
Wow.
And in their case, that's pretty cool. In their case, Kathy's vision is for children to have an opportunity to learn about disruptive innovation, not just earth sciences and life sciences and so forth, but learn about gene editing and drones and start to imagine where the world is going to be and sort of spark that interest in thinking about the future. Because of that, they partnered with schools in Florida, and Amicide set them up an entire system so they can deliver learning first to the teachers. So the teachers are trained because teachers need to know about disruptive innovation too. So there are all these kinds of thousands and thousands and thousands of use cases where Amicide comes in and the institution says, hey, we want to teach this this, and it has to be engaging and it has to be great. We go, great, we'll stand you up a branded platform in 24 hours, and we allow you to generate revenue and be sustainable.
Yeah, I mean, and that's for you guys. I mean, if you want to be if your goal is to be an innovative tech company, and then you have Kathy Wood, using your technology for like, an internal thing for her, it's like, all right, that's a good little stamp of approval there. But so going back, just so I understand the Blackboard Canvas thing. So when you're talking about them potentially being custom, so would it look like, so right now, right, if I'm taking, say it's like an intro to rock climbing course through my state university, and Blackboard or Canvas is, and for anyone out there not familiar, basically just like the online platform you'd use to
LMSs, learning management.
Okay. Yeah, learning management system. So yeah, you take your quizzes on there, see your grades or whatever. It's kind of that conduit between the the online messenger
institution and the user, right?
Exactly.
Institution software.
So would Amicide come in then instead of offering what Blackboard and Canvas is already doing for that course, but transforming that course then into like a consumer facing product, so anyone out there could take that intro to rock climbing course?
Wow, we should put you on the payroll, Aaron. That's exactly correct. And
all right, I got it.
All right, you got a new job.
But see, you're a good teacher, because usually I'm slower than that. So because I picked that up quickly is because you explained it well.
No, I don't know. I give you full credits for that. But when you think about taking rock climbing in a traditional so-called online class, right, from a traditional LMS, you look at a boring video, you click through a PowerPoint, and then you go do something. The Amicide experience is much different. You can have a flash meeting with a group. You can do a group project. You can film yourself, tape yourself, and upload the video. You can do a group project. You can talk with an instructor. You can have a chat. You can see a discussion. You get to be fed news articles about the person who set the latest record on climbing 14ers. You get to have relevance and engagement out of the box. That's what helps people stay. And that's because that's what people really want. That helps people be successful. So it's not rocket science, right? By helping our users be successful, we help our partners be successful, and we drive revenue. It's as simple as that. It's a better mousetrap in an industry that really badly needs it.
Yeah, and I love that. Like you said, not trying to boil the ocean, not trying to reinvent the wheel. There are all these people out there that have this great information, have this education, people out there that need it. You just need Amicide to connect them and deliver that in a way. So education is I'm very passionate about it, something that I love, always like to learn about the new technologies. We've had other EdTech companies on the show before. So Dr. Ann, thanks for joining us today. Dr. Ann Marie, thanks for joining us today. My last question, what was your course at University of Michigan? What'd you teach?
I taught engineering. I was a professor of mechanical, biomedical, and material science and engineering. So I taught all kinds of engineering classes.
Okay, I don't think I would have taken your class in college, but I'm sure.
But I think this is more or less a reaction to that, because I could impact maybe thousands of people being a faculty member, and then being an entrepreneur was really fun with my first company because it was successful and we sold it for a bunch of money. But this company, I can have an impact by doing this work for a lot of different organizations. So what we do is really, really fun and really, really needed. So we're excited to grow.
I'm excited for you guys. Anne-Marie, thanks again for coming on the show today. Excited to get you on in the future. Any developments that you guys have at Amicide, would love to have you guys back on.
Thanks, Aaron. Thanks so much.
No problem. All right, guys, that was Dr. Anne-Marie Sastry. Again, Amicide, ticker AMST. Pulling that chart back up here. Cool story there. Love that. All right, guys, let's get Nick back on the show, get some more stock headlines. We've got about 9 minutes left in the show, so if anyone's got any tickers, any trades, any stocks they'd like to check out, let me know now. Hold on, let me get my permissions back up for Nick so he can see the comments. Beautiful. Jesse, all right, Jesse, I'm not acknowledging that comment. Guys, stay civil. Stay focused. This is important. This is serious. This is Benzinga Life. Mr. Brown, welcome back. How you doing?
That was a great conversation you had with Dr. Ann. I was sitting here and it was very interesting. I learned a lot.
I learned a lot too. I find that's a very common theme. Anytime you speak with an educator, you end up walking away learning something. I wonder if there's a connection there. If that's why they became educators.
Maybe because I think some teachers really can connect you via very quickly because they explain it in such a detailed way, but not.
Whoa, wait, hold on, Nick. What's going on? Wait, gotta go to the 5-minute chart here. What is going on? What'd you do to Mr. Spy? What'd you do to Mr. Market? What happened?
Well, okay, so there is some reports here within the last few minutes, within about a half hour ago. The U.S. has rejected all the additional conditions requested by Iran and urged Iran to lift any restrictions on international inspections. It has also said Iran should not be allowed to enrich uranium beyond purity levels of 4%, El Arabia reports. I don't know if that's the case, but that's the only headline I'm seeing.
Like I was making a joke. I was saying that I don't think it was a good joke. I was saying that you learn something talking to educators. I wonder if there's a connection there because they're educators and you learn something from them. Like that's why they. Yeah, I don't know. It was. Yeah, I don't know. It's kind of funny in my head. I guess it wasn't trying to be ironic. I don't know, Nick. Maybe it's this Iran deal. Looks like just a broad sell-off across the board. SPY Qs look the same. Just since about 12:20, we hit this top on the Qs. Looking at here, 317 about. Rejected, came back down here to 315. So we'll see if we get any buying action. I mean, I don't know. Like Biden's gonna speak. He's gonna announce the student debt. Like, is the market gonna react to Biden speaking about things that we mostly already know? I don't know. I really don't know.
Unless it was J.P. Morgan's Marco Kolanovic. He was on CNBC right around when that sell-off happened. Hey, that Benzinga news team better get back in there and check to see what's going on. I don't know what happened because I have the TV muted, but I saw him making some headlines. I don't know what's going on back there. So
I don't know. There's probably nothing we need to get to. Sometimes the market just does that. We'll drop, a 0.5% on the SPY for seemingly no reason. So I'm not worried about it yet. But if we keep dropping here, there's gotta be something. Yeah, I mean, I'm just seeing the Iran headlines. White House press secretary calls Texas judge blocking about. Okay, that's not it. I'm just looking at the headlines under SPY right now. So yeah, I mean, it looks like this Iran deal. What is? Hold on. Now I can't. Uh-oh. I screwed up my screen. All right, we're starting over, refreshing. Traders coming back from lunch early, maybe. All right, Europeans are in contact with parties to the Iran nuclear agreement to organize a fresh round of talks. Hearing U.S. said to have rejected it. Okay, so maybe what were these Iran nuclear agreements going to hopefully get us closer to an end of the conflict in Russia and Ukraine? Is that why the market's selling off on the news of us rejecting it? I just don't get the importance of the Iran nuclear deal to the U.S. markets today. I don't know. Who knows?
Well, I do know whenever you were having that conversation with Dr. Ann, there was some reports that crude was spiking, and I'm trying to see if I can pull up the WTI crude chart. I'm not sure if crude is still
okay. So all that's related. So Iran. Okay. So this deal, I presume would have, if completed, would have meant Iran would supply some more oil to EU, relieving some of that pressure in Europe right now of energy prices. And of course, if the U.S. rejected whatever Iran put forward, so back to the table, basically. I don't know. I mean, back to the table.
Yeah, because it looks like investing.com, it looks like oil is down just about 0.2%. So I don't really know. I know interest rates were higher this morning. I don't know what kind of happened. So we're going to have to really watch this. I did get some updates, Aaron, from that Twitter meeting. Reuters did report there was some new reporting from Reuters. And in that meeting, they say in the internal meeting, it says Twitter general counsel tells staff, quote, "We have never made material misrepresentation to a regulator, to our board, to all of you," end quote, internal meeting. And the general counsel tells staff the company reached out to various agencies proactively before whistleblower news broke in that internal meeting. I'm going to work to see if I can get any other more details, but that's the latest I have from Reuters, from the newest Reuters reporting. I'm going to have to watch that meeting watch that internal meeting because CNN was saying that they were holding some kind of meeting with the talking about the new Mudge whistleblower and the new Mudge stuff. So I'm going to have to watch that. We're going to have to watch the 1:30 p.m. this afternoon meeting with Judge McCormick to see what happens in that. there's just a lot of news and Twitter news as I ease back to head to school tomorrow. There's just a lot of news pounding the table. And I was thinking maybe we're going to go out with a bang today. And it looks like we are going out with a bang in news.
Yeah. And sometimes, Nick, I'm just letting you know this, it sometimes feels like you got to be up to date with everything that's happening at the second. I would just say, focus on the big stories, the ones that are important, and staying informed and updated on those stories. And there's a lot of noise out there, from 9:30 a.m. to 4 p.m. every day while the market's open. There's a million headlines that come out. And really, at the end of the day, only a few of them are really things you got to know about. So while you're in school, and these headlines are flying around Twitter and stuff, just stay focused.
Yeah, to that point, there is a new report here from Reuters. It says Twitter exec tells staff company is working on new project to give users more control over content they see in that internal meeting. So, these are just new developments. I don't think we.
That's actually interesting because right now my Twitter, and I've kind of screwed myself up on this. My Twitter is like basically half and half, like complete entertainment, and it's a lot of like shit posting memes, like just like funny stuff that is probably a lot of it like inappropriate too, and then half like professional stock market investing news. And it gets really like hard sometimes, like on like a weekday I might be on Twitter, on my personal Twitter, trying to find news and stocks and stuff, and I'm seeing all these like memes and stuff, and it's like I don't really want to see this right now. Or then vice versa, on the weekend I might not want to see so and so's equity research report on Bank of America, them tweeting about it. I might want to see the memes. So it's like, I don't know. I probably should have made like a personal fun meme Twitter and then like a professional stock one, but I didn't. And now I feel like it's too late. So that's nothing really against Twitter or their product or the service, just more of a personal champagne problem that I'm using this platform to talk about.
Maybe it's the new algorithm they're trying to come up with. Maybe it's a new algorithm, like, maybe if you mute something, maybe if you mute one account related to this topic, you won't see any accounts related to that topic. We're just going to play around. They're going to have to play around with it to actually see what really works, because, who knows? Are people going to leave Twitter once Elon Musk buys it? There's just these developments that are like, nobody really knows if the monthly daily active users or daily active users in general are going to grow. Are they going to decline? There's a lot of unknown.
Yeah, definitely a lot of unknown. Couldn't have said it better yourself. I anticipate my personal Twitter feed that I'm going to get a lot more, I'd assume, and I don't know if anyone else feels this way, but like right now, I honestly don't. Like I'll see the big political headlines, but it's not dominated by like political stuff. But then I feel like every election cycle, it starts to be like in those coming months. So I'm already kind of preparing for that. October, November here, to just be like bombarded on my Twitter feed with all political stuff. So I don't know, not really excited about that, but again, anticipating.
Well, then just come over to me, because I don't post memes. And, I just post the headlines. I just post.
Yeah, maybe that's what I should do. Just stay on your
don't post the
profile.
Memes. Some memes I could find funny, and then just some memes it's like, yeah, let me hold off on posting because someone could take it the wrong way. And then there you go. Then they're retweeting it saying this person's a bad person. Look at their content, and they're just, there it goes. So I said, forget it about memes.
Yep, exactly. You're never going to please everyone. All right, Nick. Well, appreciate you coming on. Again, good luck on your first day of school tomorrow. Everybody out there, wish Nick some good luck in the chat. First day of junior year, right? Senior year?
Junior year, yep. Interning at Benzinga throughout the school year. Yep, interning at Benzinga throughout the school year. It's going to be a very exciting school year, I think.
Hell yeah. All right, man. Well, a pleasure to get you on today for basically the full hour and a half. Got you a little break there when I was talking to Dr. Anne-Marie, but outside of that, always a pleasure to have you on, man. Looking forward to some days throughout the fall where, maybe you're off school early, or maybe you're, off on a Friday or whatever. You can hop on the show. But yeah, man, everyone, again, smash the like for Nick. Been a rock star, coming on the show about 10 or a dozen times in the past 3 weeks or so. So Nick, can't thank you enough, man. You've been a great addition.
No, thanks for having me, and thanks for letting me intern, and cannot wait to see what this year holds. And I know Fridays I get out early. I surely will be joining to play some trivia.
Hell yeah. All right, Nick. Well, enjoy the rest of your Thursday. Wednesday, right? Enjoy the rest of your Wednesday. And yeah, take some time to chillax before school starts.
Thank you. Thanks, everybody. Have a great one and stay safe, stay healthy. Thanks, Aaron.
Yes, sir. All righty, y'all. It is 1:02. 2 minutes past. We got to get over to Stock Market Movers with Money Mitch. Do not go anywhere. This stream will automatically redirect you there. Boom.